I'm going to cut to the chase. William Cohan's book on Goldman Sachs, Chapter 2 is called The Family Business. And Goldman Sachs has always been that emotion from the 19th century as well. Solomon is completely removed from the fabric of that chapter in Cohan's book. How threatened is he now by those that yearn for a Goldman Sachs that was a family business?
He would certainly tell you, David Solomon, that it is not a family business. They don't want to run Goldman Sachs like this partnership that it used to be. They see this as a Fortune 100 company, one that has a corporate setup, one where is one prime CEO and everyone who falls under him. Now, 4 years in, what is the mark-to-market on David Solomon? This is the third major reorganization of his business lines that he's undertaking in just 4 years in the top seat. In fact, with this one, he's undoing some of the signature moves from his last major restructuring in 2020. That, to us, definitely feels like a move that is being taken under pressure and in response to some of the criticism that senior management has faced inside and outside the firm.
What is the pressure versus a partnership board structure versus a publicly traded board structure? Is there heat from the board or selected members, or is it from the managing partners, whatever the modern phrase is of partnership?
Ultimately, you're responsible to the shareholders. If the Goldman Sachs stock had been outperforming everyone else in the financial services universe, there would be no pressure. Doesn't matter if there's griping, doesn't matter if there's complaining and grumbling inside the firm. But that's not been the case. In the last 4 years, the firm has not been able to re-rate the stock. It has not been able to get that jump over Morgan Stanley. It has not been able to get that jump relative to JP Morgan. When that happens, when there are so many changes, and a CEO who's trying to change the very fabric of Goldman Sachs from what it used to be 20 years ago to what he hopes it will be down the road, it will create a certain level of discontent, and that will bubble up to the surface like we're seeing.
How much has David Solomon lost the faith, not only in investors, not only in the board, but also of people within the rank and file of Goldman Sachs?
It will be very hard to say that he has enjoyed the full and total support of his executive team. Having said that, he would argue that 4 years is not enough time. He still has a few years in him. He still has enough time to make the pivot and tell a story to shareholders and investors and analysts that actually presents Goldman Sachs as a company for the future. But when he has to make strategy reversals and about turns, it just becomes harder to land that narrative and make sure that it sticks.
What was the story with the consumer unit, considering that they've lost money consistently and now seem to be reversing?
And that's important because one of the big changes that they're planning with this reorganization effectively involves dismembering the consumer unit as it used to be. A lot of the direct-to-consumer push that was operated under this Marcus brand name is getting shoved into this larger asset and wealth management group. The partnerships that they had with Apple and General Motors, the Green Sky fintech company that they bought last year, transaction banking, will exist as a standalone business, much smaller than what it used to be, and will show losses at least for the foreseeable future.
How does someone like Apple respond to that?
Apple doesn't mind as long as they have the leverage in the relationship, which they clearly have. They do not care about the internal dynamics at Goldman Sachs. But Mike Mayo at Wells Fargo gives us the best analogy. To him, what they're doing with consumer is effectively equivalent to the demotion of Pluto as a planet.
That's so Mike Mayo. If you know Mike Mayo, that's so Mike Mayo.
Right.
Does that put Utah on Pluto? What happens to Utah Goldman Sachs after this reorg?
It stays. They're still committed to a lot of the tech stacks that they're building, and that is part of the reason why they have such a big presence in Utah. It's not so much for the call centers in Utah and Texas, but for the tech platforms that they're building.
Why now? I mean, Goldman Sachs reports earnings tomorrow. We're going to parse through them. Is this a sign that there are going to be some huge negative surprises having to do with the consumer banking unit? Is this because they are failing to deliver on the fundamental level, or is this just simply a coincidence that comes especially ahead of a new economic cycle?
Well, three things. Hopefully no surprises with respect to the consumer business, because we've been telling our readers and listeners and watchers that it is going to face a big loss-making year. At mid-year, Goldman projected that the consumer business was on track to lose more than $1.2 billion. This reorganization will change some of those numbers. But equally important, because consumer was not working the way they hoped to, they are taking it to a narrower lane and hoping that they stick it to a business that plays to its strengths. equally important in the last 4 years, David Solomon and John Waldron, his deputy, they had not necessarily been playing up the strength of trading and banking at Goldman Sachs, which, let's be honest, is Goldman's core business and something that they're really, really good
Cut
at.
to the chase. How many days has he left? How many weeks has he left? How many quarters has he left?
I suspect the Goldman Sachs board and even his management team will cut him some slack and will have more patience
Okay.
for him than Tom Keene.